What is the one thing you should definitely avoid when investing in the stock market? I'll tell you that in just 1 minute, but first, please don't forget to like and subscribe below. Maybe even leave a comment, share this with a friend if you like it, and share it with a friend if you don't like it, because it'll help me out and I appreciate that. Anyway, what is the one thing that you should definitely avoid when investing in the stock market? And I don't know if you can see it right here, but if not, I'll tell you, this is an article about how Avaya just filed bankruptcy. Now, when you invest in the stock market, there are very little things that can adversely affect investing in the stock market if you're doing it for the long term. If you're doing it in the short term, I can't help you because I don't subscribe to doing that. I don't mess with any day trading or any of that. I always take a very long-term approach. I like to use compound interest and good basic fundamentals of investing to make millions of dollars, which I have. So one of my filters that I talk about in my book, Ryan's Rules of Investing, is the fact that you should never invest in a company that can go bankrupt. I mean, I guess any company basically could go bankrupt, but when you deal with a company that has an over $1 billion market cap, and the one thing I like to always talk about is staying away from retail. Retail is the biggest sector of the economy or in the stock market that could actually go bankrupt. Why? Because they don't have patents, they don't have any invention, they have nothing really going for them that's their own personal asset. They're buying from wholesale or manufacturing from wholesale or buying from a manufacturing wholesaler, and then they are going to be then selling retail. So they really don't have anything or any good value underneath them. Avaya, this is also a basic fundamental as well that I talk about later on in my book that also comes from, of course, Warren Buffett, which is when you're looking into buying a company, you want to see, can that company, pretty much for no better word, be made extinct? Are they in a position to keep evolving and getting bigger and staying with business? And in the new world of cloud computing, or not so new world, not too many people use Avaya phones anymore. You know, you don't see that many people ordering actual phone sets. Everyone works off of cell phones. They're working remotely. And as a result of this, this company has, I guess, evolved out of or extinct at this point. So there was a chance that, you know, this may not be a retail company per se. I guess it is, but it really would be classified under communications and electronics or whatever it is. I don't know. I haven't looked it up and I honestly don't care because they're not bankrupt and I wouldn't invest in them anyway. So the idea is don't invest in a company or try to stay away from companies that you think could go bankrupt, have a possibility of going bankrupt. And this is not really rocket science. Just say, okay, well, is this particular sector or this particular company selling something that I think will be around for a while? Is it a sustainable business? Can something be made to, you know, make this, like I said, an old way of doing business or extinct? Right? Anyway, so there you have it. Stay away from companies that can file bankruptcy. That is a one big pitfall. If the company doesn't file bankruptcy, it doesn't go out of business, it'll get bought out. So no matter what you invest in the stock market, as long as it meets the other filters that I have, the other rules of my investing, you'll be just fine. So if you'd like to learn about Ryan's Rules of Investing, go ahead, look at the link in the description. You could order the book online. It's very inexpensive. It's my work of what I've learned from all the times of losing money and all the experience that I've had. So anyway, don't forget to like, subscribe, and comment below, and share this video with a friend. And I hope you guys have a great day. Later.